Hi, and welcome to today's daily US pre-market analysis, where we take a look at the markets, what's moving the markets, and some trading opportunities. So let me get started here with the disclaimer. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. I'm your host, Gio Benacor, a senior market analyst, market educator, and demonstrator of strategies with Vantage, bringing over 20 years of experience as a commodity trader. I hold a Series 3 license and also a CMT candidate. The agenda for today, we're going to be looking at the economic calendar, what's moving the markets, then find key levels of support and resistance levels, and trading with Fibonacci tools, to name some. About Vantage, real quick, our ecosystem offers over 1,000 instruments, over 100 chart patterns, and over 100 technical tools and indicators. We offer CFDs on Forex, indices, shares, commodities, cryptocurrencies. What we stand for: lightning fast execution, award-winning 24-hour support, intuitive tools, global connectivity, and strict regulation. All right, so let's get with it. I like to begin by identifying consistent, clear trading habits. Those may include being comfortable with the prospect of losing money if the market goes against you. Emphasize risk management, using percentage-wise, between 1 and 2% of your invested capital of your equity. Volatility can spike and spreads are widen, so reducing leverage is a good idea. And the use of stop losses are highly recommended. As one of my habits is obviously to identify trends, timing the entry and exit points, risk management, and confirmation and validation. All right. Before we get started, I like to just make sure that we are in the same page. I think it's first important that we have a shared common vocabulary for what is technical analysis. And so I'm going to start real quick on that. Now, is technical analysis just a form of data visualization? Obviously, charting, displaying chart data, market data in lots of different data visualization modes. It's a big part of where technical analysis come from, but you got to go back a couple of hundred years to the rice pits of Osaka, Japan, for a gentleman named Munohisa Homa, who invented the Japanese candlesticks as a way to try to capture all of the behavior of traders in those rice pits. With, of course, advanced the discipline over hundreds of years, and there are lots of different chart types. But what I'm going to argue to you now is that technical analysis is far more than just collecting data and displaying it in a way that we can interpret a lot of information quickly. That is part of it. But if you look at definitions from some of the very early texts from the 1920s and 1930s, that said technical analysis is about the study of the market itself. All of that price action, all of the investor behavior, everything that's happening in an open, freely traded market is part of our discipline. And I love that definition because it is quite broad, and hopefully through today's session you'll understand just how broad and the depth of study that you'll go through. We also know that technical analysis is a study of that supply and demand relationship. We care a lot about the behavior and the psychology of investors, and it's one of the most hardest things to quantify when you are thinking about investment decisions. I'll argue that it's all represented in this beautiful little element called price, which we can call it also a systematic evaluation. And systems, the reason I'm bringing this quote up is that a lot of us have heard about algorithmic trading, high frequency. You might be an advanced programmer, you might know Python or R or many other languages, and that is an important way to express some of the ideas. But even if you're not a coder, you're not an algo trader, you should be thinking in terms of systems, a rules-based, repeatable approach. And that's something that was thrilling to me as I spent time surrounded by some of the best money managers in the business, is that they have a defined, repeatable process or a system that they follow no matter what the market is doing. All right, a quick refresher from your Economy 101 class. Remember, at a fixed rate of supply, an increase in demand is going to move us up the price equilibrium, or a decrease in demand will move price down the equilibrium. So when we're thinking about an open, freely traded market, demand, greed of investors is inherently pushing prices up, and fear or selling pressure is going to push price down because it's a fixed supply. I want you to hold that thought in your mind because it is perhaps one of the most important parts of the magic that we're trying to unlock here, and or the message of the markets that we're trying to decode, which is related to learning that if you take emotion, the would be or the could be or the should be, out of your decision making, and if you look at just what is happening and you can quantify that, you have a big advantage over most human beings. I will argue for all of us in the investment discipline, there's a lot of emotion tied to those trading decisions that we make each and every day, and those emotional impacts on our decision making can be very negative. So the more you can remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. Right. With that being said, I'm gonna start sharing my charts so we can hop right into looking at what the market is giving us. So trying to identify opportunities for today. Okay, so in front of you, you should be seeing my charts. I am on a daily candlestick chart. Before that, let's take a look at the economic calendar real quick to see what we have stored for us today. Well, we received unemployment rate in the UK, basically staying the same in the UK. For the US, retail sales month over month came in, and it was high. Actually, it was higher than the forecast. And tomorrow is going to be that big day of obviously receiving the Fed rate, that interest rate cut that is imminent. Basically, that's why we're seeing the indices running, making all new all-time highs. Now, for the Nasdaq itself, yesterday was a momentum push to the upside, helped very much by that $1 billion purchase of shares by Elon Musk of Tesla. So that was a giver to be long the asset. As today we've seen that same momentum or that same fluctuation has overspilled into the London session earlier today, and the asset came and fluctuated towards a psychological level of 24,400. So I like for you to start thinking and keeping in mind around this level, psychological round values. Okay, that those are inherently followed by many traders across the globe. So a system is that is part of the system, looking for levels of resistance and support around psychological values like such of today. So we've seen that yesterday when we had identified our levels of resistance for the market, we were basically just using our trend-based field extension tool to come in and identify those levels, and the golden proportion was 24,202, and that's where the market fluctuated even higher. So today, again, since we are in new territory, we have not traded here before. Therefore, that is the best use of this tool. So I'm gonna choose it from yesterday's move to see if this trend is going to continue. So from yesterday's low to today's high to today's low, and here we have the levels that the tool gives us. So the Fibonacci tool, obviously the golden proportion, or what we find in nature, is the 0.618%. So that is the value where everything comes to. For example, if you were to measure your from your belly button to your head or to your toes, you will get that number. So that's particular. It's interesting because it's not man-made. It's nature-made, and we have used it obviously in trading. So that's gonna be one of my resistance levels. Okay. Now we can either go ahead and choose that swing high, but basically we have kind of penetrated that psychological value. So the next level, which sits right above our swing high, is the another Fibonacci number, which is the 0.382%. 50 is in there, but it's not a Fibonacci number. So, but it's still in there because just to follow suit. Now, with this tool, we have identified our resistance for today for this levels, and now you could also come in and just use psychological values as well, like I was telling you before. But just for this session, I'm gonna use the trend base because again, this is all new territory. We don't even know if when the market opens, if the market is gonna continue to push higher. It could come in and do a pullback and retrace. Now, 25 basis points is what the market is already priced in. Okay. Now a 50 basis point rate cut, that will obviously spike the markets into rally mode. That we'll find out tomorrow. Now 75 basis points is what the market is trying to price in, or also for the entire year. So there are going to be 3 rate cuts expected this year. Now this week, September, then October, and then December. The last one will be December 10th. So from now until then, if the market is going to continue to speculate that there will be more rate cuts, and the indices per se love rate cuts, we understand that we are in an uptrend momentum to the upside. So we'll be looking to enter the market long, obviously speculating or catching those reversals, those retracements, those pullbacks. As far as support goes, we have a fib retracement tool. So from our swing low to the swing high, and then again using our Fibonacci values. It's very simple when you use those Fibonacci values. In this particular moment, I am going to use the 50% because it look where it's pointing towards 24,240 psychological round value. So why not use that? I'm not saying that it's gonna come towards it, but at least we have find our levels of support and resistance, and we understand that we're gonna be going long the market when the market opens. We have made those swing highs during the London session. So as the market, this is profit taking. This pullback that we've seen from the swing high, this is profit taking. The market opens in the US. Momentum, the FOMO scenario that I just showed you is gonna bring more and more buyers into the market. So again, let's use our trend-based FIB extension tool. Measure that. I'm gonna use the 50% and the golden proportion because again, this is all new territory. Now, as far as projections for the S&P, can we contemplate the idea of seeing the S&P by the end of the year at around 7,500? That could be the case. So in this case, I'm not going to be using the retracement because I want to use psychological value. So 6,600, it just jumps at me. So that's what I'm going to place that support. So let's go for the Dow. All right, so the Dow, oddly enough, the Dow is the one that hasn't really made that much of a momentum to the upside. I mean, previously other days we have, but not as much as its peers, as the S&P and the Nasdaq. So yesterday's fluctuation, the market, these are the levels that I placed yesterday, and the market basically rebounded off those levels. Okay, so I'm gonna just tie it up to those swing highs and swing lows, in that range, and looking to the market, to the Dow, it's actually just either just ranging. This is basically ranging. Speculation for the upside is still favored right? But the Dow has a bit of a different uh, behavior than the indices. Now, that doesn't mean that the Dow isn't going to be following suit like the S&P and the Nasdaq, but it's a different kind of behavior in the Dow. So I'm looking for ranging. I'm speculating that the Dow could make an attempt at trading above 46,000, trying to revisit that swing high or that all-time high. Crude oil, we've seen crude oil spiking and obviously trading above our level of resistance that we have placed yesterday. So we need to come in and find new ones. In crude oil, the look over it in regards to crude oil demand is going to be still there. Obviously, the tariffs and Trump's trying to put tariffs of sanctions on Russian oil, trying for China and India to stop buying their oil. But however, the demand is there. Is going to continue to be there, and the thought of their this glut or this supply coming off online obviously brings our momentum to the upside much stronger. So I'm going to use 65 and a half. I like to use 50-cent increments of level of resistance support in reality for crude oil, moving by 50 cents. So as you may see, $63 psychological has been penetrated, has been rejected actually. So initially I'm gonna use that swing low as today's my first level of support, since we already have fluctuated there during the London session. Now, what are the chances for that to come back towards it and then find it again support? But in overall, looking to go long the crude oil, nat gas. That this is a very wide swing. Okay, so that took out a lot of sellers on this dip. So they were taken out. So will they be there again if the market happens to fluctuate lower? Well, the market today opened right at that's a high. Let me see. So right at 299. So is that going to be a psychological level of support? Of course, that is going to be that level. Market fluctuated below both of our everything since yesterday. So today we're going to be contracting the chart and looking towards our left and see where we can find previous swing highs, so that we can use them as possible levels of resistance and support. Now this is too close to each other, so I'm gonna just basically move higher to a 116, 316 for resistance for the nat gas. And since we have such a long wick, and here's what I want you to analyze about this long wick. Market dropped during this time frame. It has dropped, and for whatever reason, which is obviously buyers, absorb all of those sellers and continue to push higher. So what are the chances for this to continue to happen? Now we can either come in and say, okay, well, the low of this swing should be a level of support, since we have been previously there today. And I'm gonna use something out of context, which is basically giving an inside support to this fluctuation using a previous swing high. This couldn't happen because I will be already inside today's market fluctuation. So I want to be looking at something where I could contemplate the idea that the market also happens to pull back, find a support around these levels. Anyway, by going long the energies, gold 3,700 was rejected during the London session. Okay, we did open gap up. All right, it was closed. Profit taking is being here. Yesterday I spoke about how soon can we get to 3,700, so we can contemplate how soon we'll get to 4,000, and depending on how soon we get to 4,000, we can contemplate finishing the year for gold at around 5,000. Now, yes, that I can already hear you saying that's far fetched, but we never did expected gold to reach 3,500 so quickly, because it did hit 3,500 back in April. From there, it did pull back quite a bit, but from after that pullback, gold has nothing but done all-time highs, and it's going to continue to do so because of geopolitical uncertainty incrementing between everyone: the U.S. and China, Russia, Ukraine, Israel, Turkey, Russia, Poland, Russia, NATO. So I mean, and then in Latin America, I mean, there's so much things going around that for us to come and think that gold will lose is a title of being the safe haven asset now, that is preposterous. So the only thing that we can contemplate to saying is that gold is gonna go push higher. So we're gonna start looking for long entries, right? Looking to be long the asset. Initially, I'm using again 3,700 because it's that psychological level where we obviously kind of gone back towards and fluctuate above or close above that. All right, at least in a time frame, we should be able to do that. And for my second level of resistance, using the trend-based Fib extension tool, so we can just use the Fibonacci values to give us that place. Now, if you don't want to, let's see, almost 37.20. If you don't want to use that swing high as your level of resistance, you can, I mean, a bit higher, the 0.38 20% or the 38 20% in this case could be. It's up to you, but I'm gonna use that. And then for support, well, let's just do our retracement tools, and then use. I'm gonna use here. I am gonna use the 38 20% and the golden ratio. There we have our levels of support and resistance, and the trajectory or the bias to be long. Then we have silver, also $43, jumps at me psychological. When will we see that? I was talking last week to see that we'll most likely see silver at 42 this week, and we already hit that. So how much more higher can we see? Well, let's see. I mean, if you take a look at a monthly chart on silver, this puppy just is all time just really just pushing higher. Let's go back to one daily. Okay. Now I'm gonna take a look at the support level. I'm gonna use my retracement tool. Support. Oh, look at that. So that swing low hit our golden proportion Fibonacci extension tool. I'm just gonna use then yesterday's swing low in this case. All right, that's silver, copper. $5 for copper soon. When will we reach $5? Well, we gotta keep trading, but we'll get to $5. And we've been there before, so why not? Then on copper, I am gonna use just psychological values. 460 ish, okay. And 458, which basically almost 458. So I'm still long the metals, so looking for long. Bitcoin. All right, so Bitcoin is catching a bid, even though the last 3 days, the previous days, have been in a downtrend. Yesterday's pretty wild swings we saw here in Bitcoin. So I'm gonna use yesterday's range to initially give us our levels of resistance and support. And bring down my second level to 117.5, and I'm gonna push lower on my second level of support, 113.5. Still looking to be long Bitcoin. Bitcoin to be hitting 200,000 by the end of the year. But we first gotta hit 150. The euro is spiking, fluctuating above 118. The dollar index is getting hit, and it most likely will continue to get hit. And we'll see a continuation to the upside on the currencies. That was a good push by the euro, given that the dollar index is continue to decline, and it's gonna continue to decline. Yeah, until when? To where? We don't know. So looking to obviously continue to go long the currencies. Look at the pound, 137. I'm gonna use 136,800 initially, and then 137. That psychological value for the pound to reach. It could do a pullback. So let's see what will happen. Also, we understand that the BOE is going to be also talking about his interest rates. All right, so we see that the dollar index is plummeting, continuing to lose ground. So as it continues to fluctuate to the downside, 96,200 is what I'm thinking. It'll find some support, and I'm gonna do an entire dollar range for the dollar index. It could also come back up, but for now, because of the interest rate cuts that are being priced in, and tomorrow being the decisive day to find out how much of a cut, the dollar index will continue to lose value, as we understand that people will come out of those bonds, right, that are not going to be paying that good of an interest, and obviously are being placed into stocks, into ETFs, into currencies. So that's the momentum, the shift of value that we're experiencing. Now that I have identified my levels of support and resistance in this daily, for my daily fluctuations, during my day, because I'm a day trader, I break down the chart to an hourly chart, just to get a sense of what the market has been doing, or what it was doing previously previous to the open. So we understand that during this hour, the Nasdaq is pushing higher, but before that, after hitting that 24,400, it was expected profit taking to a pullback, a nice pullback on the Nasdaq. Now we found support on a previously volume cluster before that breakout. So we understand that at 24,350, there's a lot of buyers sustaining the market higher. So again, another push higher. So can we contemplate that by the end of the day, we could most likely be hitting 24,500? We can contemplate that, speculate that. Now, what are the chances for this to decline and hit lower? Well, it could, right? The market is open, and we could start seeing a sell-off, profit taking. But I'm going to speculate that the momentum spilling into the US Asian Open will remain positive to the upside. Then we have the S&P, kind of basically doing the same, but has more of a momentum to the upside built into it. The Dow recovering after doing different moves to the downside, and let's see if it'll do a nice parabolic movement at the open in a few minutes from now. And hold on for a second. So we can come and contemplate that the market, when it opens, is going to spike. All right, so crude oil made that nice parabolic movement earlier. Nice higher highs, higher lows. Uptrend, profit taken, gap down. But let's see how much a pullback will it do. Nat gas, basically flattish in this hour. Gold in this hour is in a momentum to the upside, recovery after making this swing low. Momentum to the upside build, so entering longs. Copper, is it going to recover, or has it already fluctuated to the downside? But basically flattish right now. Bitcoin getting ready to make a breakout to the upside. I'm speculating. All right, so here we go. So we have the market opening. The euros continue to push higher. Pound also pushing higher, and dollar index declining. So now that we have this sense of the market, I'm gonna break it down to a 5-minute chart and I'm gonna turn on my VWAP, volume weighted average price, and my fractals, just so I identify those fractal highs and those fractal lows. And let's see, let's go with the momentum. Hold on for a second. So we have here Nasdaq pushing lower, but fluctuating around the VWAP. This is the market in basically in the last hour. It has been fluctuating around off the VWAP. So this is a pivot point. If you understand about pivot points, understand that this is where the market has found more buyers around this level, so sustaining the price high. Let's see how much of a fluctuation that we're going to be able to see to the upside right now. To contemplate an entry, I want to wait for the market to come down towards if it comes down towards the lower band, and from here enter the market long as a reversal, and my targets will be the VWAP and the upper band initially. Now another trade setup will be that if the market, since we have seen that the market has been bouncing off and just looking for a direction off the VWAP, and when if this candle happens to close above the VWAP, then I want to enter long the next candle right at the market, right when this candle closes above the VWAP, which is the blue line that you've seen here. Then I will enter the market long and targeting the upper band. Now that's for the Nasdaq. Let's take a look at the S&P, what the S&P is doing in regards to the VWAP. And here the VWAP is completely, let's see where the VWAP is. It hasn't populated yet. Come on, there it goes. Okay, so again, also for the S&P, the market is not as profound as on the Nasdaq, as we saw on the Nasdaq, that the market was bouncing off the VWAP. Here it has fluctuated below, above it, giving more of a wave fluctuation, but we have a pretty wide range already in this 5-minute candle, and we want to wait for this candle to close above the VWAP and to enter long the market. Take a look at the Dow. So the Dow decided to fluctuate to the upside in nice parabolic movement. Nice. So 46,000 is going to be the marker. Crude oil is outside the VWAP, so we couldn't be using the VWAP for any entries. Let's turn on the Bollinger Bands and this puppy and see how that fluctuation is doing. So if you use the Bollinger Band, also again, we understand that volatility is expanding, so we use a 2 standard deviation. Entry long towards the upper band is where the target will be. If you decided to enter the market right now, that will be a short scalping trade. We're pushing higher crude oil. Let me turn off the Bollinger Band real quick. Take a look at net gas. Net gas is okay. So nice reversal of the VWAP or the upper band. So market is fluctuating. Let's see. As the market fluctuates lower, it'll find support at the VWAP as it has seen before. So waiting for the market to move lower into the VWAP. If you wanted to enter the market at the moment, enter it short. That could be a possible trade, but given this candle right here, give me probably finishes as a doji, so that will tell me a change of direction. Take a look at gold. Alright, so gold. See again, nice trade off the VWAP, parabolic movement, breakout, boom. So 3,700 the target if you enter the market long now. Silver is completely out, has fluctuated outside the VWAP, so $43 continue to be our target, even though we did open gap up, has been closed, fluctuation lower, profit taken, but overall looking for a push higher. Copper and on the lower end of the VWAP. So initially we did find a rebound of the lower band and a rejection of the VWAP. So let's see if we are able to again close above the VWAP and then enter long that trade. Bitcoin, so fluctuating below the VWAP, pushing towards the lower band, and from here I will look to enter long again if we happen to fluctuate stronger and close above the VWAP. Enter on the next candle that closes above the VWAP, enter long. Then we have here the euro continue to push higher, and the pound as well. All right, cool. So after this, take a look at the dollar index. All right, so we have rejection of the VWAP. Let's see what will happen and see if we are able to enter a position long. And the market has been fluctuating to the downside. Let's see, VWAP lower band being, as we see rejection on that. We want the dust to settle. Give it 15 minutes for the market to settle and show us its direction, where will the market have the tendency to move to. So if it's going to recover and push higher towards the VWAP. Let's take a look at the S&P. Fluctuation around the VWAP also. The Dow pushing higher. Crude oil is just right there also. Net gas and gold. So gold has given us best entry since it did show us that the VWAP was being respected. As we see that, let's see if it populates. It's taking some time to populate. Even the fractal takes some time. Alright, so there it goes. There it goes. That was a nice trade to the upside. Fractals in there. So can we continue to push higher? Will we get a rejection up when we reach 3,700? Let's see. Pushing higher, pushing higher. Nicely done. Let's wait and see what will happen after the market reaches that 3,700 milestone. Is it going to fluctuate above that? Is it going to be rejected? Are we going to see more buying frenzy into it as we hit that 3,700? Chances are momentum to the upside is built. So I'm on that side of the trade. Okay, so we seem to be doing a little pullback. Take a look at silver real quick. It's falling. Copper, parabolic movement. Bitcoin, oh, tanking. the euro, the pound, dollar index, Nasdaq is continue to trade lower. So 24,300 could be that. Initially, it was a sell-off. Yeah, I mean, profit taking, obviously. Now we are outside of the lower band of the BWAP. Looking for entry long positions. Let's see. We want this candle to close above the band, but is it going to make another? Let's see if 24,300 is going to be where the market actually wants to come in and use a possible trade setup. We can contemplate the idea. Let's see. We still have 4 minutes left on this candle, so we want this candle to give us an entry to close above the lower band, but it's not. It seems to be. I mean, might want to push now. If it closes on as a doji, that's another indication of change of direction. So why not enter long on the next confirmation of the candle that closes above the lower band? So we want that to happen. 340, 339. Let's see. I'm still waiting for this candle to finish and close inside my lower band so that I can enter the market long towards the BWAP being my first target. But will the market actually come and fluctuate even lower towards the 2430 handle being psychological level of support? Again, if we happen to close in this particular candle at or above the lower band, can we enter the market long? Let's see. We're still having a pretty good of a fight in there. Now let's take a look at 100 ticks and see how that look like. So that's even faster, obviously, than a 1 minute, because each candle has 100 ticks in it. So can you quantify this better by using 100 ticks and candle fluctuations? The patterns that are associated with candlesticks don't really apply here that much, because there wouldn't be there isn't much fluctuation in each candle to have that. Now the reason I'm using 100 ticks is because that shows me a more of an instant fluctuation, stronger fluctuation. I mean, you see the reaction of the market as that. So we're seeing how in this particular time frame, the market did kind of fluctuate below the lower band, but it slowly crept into it, and it has been rejecting it and making higher highs, higher lows. So we are understanding that yeah, this could be the chance where this could reverse. And let's see if we can actually let's see. All right, so we are about 15 minutes into the open, and so market is giving us direction. Is it going to give us a good direction up to the upside? Is the market going to rally now that as it just basically allow profit taking to take place? The redundancy of the case. Sorry about that. Hold on for a second. Okay, so we've seen that. Nice momentum to the upside. Okay, let's see. This candle is actually pushing lower. So can we speculate to see something of an uptrend? Of a strong spike to the upside? That could be the case, but it seems to be rejecting this 24th. Oh gosh, big push to the downside. Again, I think the market is going to come down towards 24.30 to find that support before it takes makes another leg higher. And so if that's the case, let's see what will happen. Pushing higher. Okay. Spot NASDAQ 100 giving us a bit of different movements here. 15 minutes. And let's see. Let's see if we're able to see a change in direction now on the NASDAQ as it fluctuates towards the 2430, 24,300, and looking to for it to just push higher. That's basically what we want. Now we want a parabolic movement to the upside. Just start rallying into rally mode. Is that going to be the case for the asset today? Will we see that momentum to the upside is being built? 15 minutes has already passed by. Let's see if that is what the asset has installed for us. The index. Let's take a look at other indices real quick. So the S&P also fluctuated lower. Then we have the Dow rebounding off the our level of support around the 45,800 marker. Crude oil pushing higher. Nat gas right around the above the 3-hour marker. Gold is actually pulling back into the VWAP. Take a look at silver, and that is giving us another leg down, actually pulling back. Is expected before a rally continuation. Copper, pretty wide movements. Bitcoin, so 115. If you look at a bit even lower than that. But it's looking to sustain itself around 115 being the pivot point. Currency is the euro, again making some pullbacks, retracements. Pound. And let's see the dollar index, what it'll do. Alright, so it did a little bit of a recovery here, but now it's again pushing lower. Let's see if we take out this fractal low and then push towards that 96,400. Alrighty, well, that'll be all for me today, guys. I want to thank you for watching. Okay, and wait for you. I'll be here again tomorrow, same time, same place, at the 8 o'clock, half an hour prior to the U.S. session open. Thank you for watching, and I'll see you tomorrow.